capital flows to emerging markets are going to take a hit as the Fed increases its rate. Robert Wood of the Economist Intelligence Unit joins me. First, let's take a look at a global macro snapshot.
Well, Latin America slowed down markedly this year and faces a number of challenges going into 2016. One, the Fed, we expect to begin the normalization with liftoff in December, and then a series of gradual rate rises. Now, we've already seen adjustments in currencies in a lot of Latin American countries. I think most of that is priced in, but we do not rule out additional volatility and further weakening of their currencies. What it's going to mean, though, is tighter financing conditions. And the region has, over the past few years, leveraged quite a lot, particularly the corporates, accumulate a lot of external debt. And now, with weakened currencies, a lot of those companies will be finding it harder to meet those debt service payments.
Robert, let's talk about the pressing need for corporate sovereigns to restructure that debt. We need to be realistic about what these economies could be facing.
Yeah, I think a lot of Latin American countries are going into choppier waters next year with the rising in the Fed funds rate. I think central banks will need to be particularly vigilant regarding loan quality, corporates, as you say, but also the consumer. Many of these markets, we are coming towards the end of a credit cycle. Growth is going to be pretty weak, and household balance sheets are stretched in a lot of countries, such as Brazil particularly.
One of the key determinants, of course, is the pace at which the Fed decides to increase its rate. So talk to me a little bit about what we should anticipate.
Our baseline scenario is a liftoff in December, and then 3 to 4 25 basis points rises in the Fed fund target rate towards the end of 2016. If policymakers see that this is causing stresses in global financial markets, they may raise more slowly. I think the key thing that policymakers will be looking to avoid is a disorderly transition to higher financing costs brought about by this Fed liftoff.